Hey everyone, I got a lot of messages. People were asking me about how I trade. And so I figured I'd make this video to kind of go over things and see if I can clarify that for you. So I always used to get in trouble because I was not really following the context of the market. And I think it's very important that people understand that there's always a context and you need to be following the context, right? So it could either be a bullish trend, it could be sideways movement, it could be a bearish trend, and you obviously are trading those all differently. You can't just trade them all exactly the same, right? So there's how do you pinpoint sort of what the context is? And the easiest way is using moving averages, right? So I use a 100 EMA, a 50, and a 20. That's what I use. You can probably find ones that work better for you, but this is what I like. And so what I do is I ignore any price movement that has, crisscrossy, choppy, wiki action, which has crossing moving averages, right? Crossing moving averages. I want the spread out directional moving averages stacked in the proper order. The 100 on the bottom, 50 in the middle, 20 on the top. If you're short, it's going to be the other way around, right? 100 on the top, 20 on the bottom. And so what I do is wait for that to happen. And then I'm on my 1 hour. I always do this on a 1 hour. And I just look for trend lines to break, right? And you might think that's way too stupid and simple. Trend lines don't work. They do if you use them properly and you understand why you're using them. And that's because there's liquidity clouds above all these high points, right? People are shorting and they're putting, because everyone loves to pick a top. You want to be the coolest guy and pick a top, right? So you're shorting, and people are putting their stop losses for their shorts above all these wicks, right? And so what that creates is just a cloud of liquidity, stop losses that are waiting to get hit. And once they start getting hit, they kind of create this liquidity waterfall of stop losses bumping into the next stop loss, while at the same time, people jumping in long, right? People market ordering in or buy stopping in. And it just creates an influx of buying pressure, right? In this instance. So that's kind of why I use trend lines or bull flags or flat tops. It's all the same stuff. It's when you have lines of candles, candle wicks, there's liquidity there. There's a grouping of liquidity, and that's kind of what you want to look for. And so what I do is start on my 1 hour, look for the spread MAs. If they're chopping, don't trade. Just go eat a cheeseburger or something. Don't waste your money. You're probably going to lose it. Draw my lines, and then once I have the lines, I don't know what's happening yet. I just have like this. I'd go to my 5 minute, and then I look for the same thing that I just showed you on the 1 hour, but on the 5 minute. And I'm looking for a couple other little nuances as well, right? So the break happens. You can handle this kind of however you want to. You could even just long the break and put your stop below here, but that's a little wide for me. Not sure about you. So I just look for the same thing on the 5 minute. So that way I can have a tighter stop, right? And then your RR gets a lot better if you have a kind of a tighter stop. So once we get through here, price starts respecting these MAs, and we kind of have a breakout. And you could argue, oh, why didn't you just draw that? You could. It doesn't matter. It's all the same. I wouldn't have done this because it's below the MAs, but you can kind of draw them however you want, as long as there's a cloud of liquidity caused by kind of a trend line or a flat top or something. It's probably going to work if you're following with the trend. So I would do something like this. I always use buy stop orders. I would have buy stopped into this, put my stop below the previous low before the break, and then ride it to about 4 to 5R. And I'll use anything. I'll kind of look left and see if there's anything that sticks out to me to use as a target, right? In this instance, maybe I would have used something like this or this. You can see the price kind of slowed down a little bit when we got up there. And a lot of the times as well, if there's nothing there, or if there's something much further, like 7 or 8R, or we have blue skies and there's nothing above there, what I'm going to do is I'll put my target at 4 to 5R in case price moves there very quickly. And if it kind of just grinds and creates kind of new reaccumulation models and grinds, as we get closer to my 4 or 5 target, what I'll do is I'll bump it out, and then I'll just kind of start trailing very loosely, and I'll put my stops below any reaccumulation models. And what might a reaccumulation model look like? I made another video about that might explain it more in depth, but like this, for instance, is a reaccumulation model. So if I were trailing this, which I maybe would have, once this high breaks, this is where my stop would go, right? I would have already been out of this trade, but I'm just saying, for instance, if I was trailing a reaccumulation model, this is a perfect example of one. We had a base, it rinsed out, we broke the high, and I would have moved my stop to there. Here's another one right here. So then my stop would have came here. I'm not swing trading. This is 2 separate days, but I'm just giving you an example. So there's a couple things that would add confluence for me. And those are things like reaccumulation models and testing of MAs perfectly and then being respected. So this one right here, of course, works out perfectly. This is a very attractive setup because of those things, right? We have the 1 hour break. We have, of course, this one was fine, but if you missed this one, you woke up later and just saw this, it's fine. You didn't miss it. You have the 1 hour break. You have a reaccumulation model, price respecting this, and a potential cloud of liquidity. So when that cloud of liquidity breaks with your buy stop sitting here and waiting, you're in, and then price rips and takes you for a ride, right? It's all about riding the wave. You're not trying to pick tops and short them. You're not trying to pick bottoms and long them. Use buy stop orders on breaks. Even in news, dude. Like, don't, obviously I'm not suggesting you trade news. I'm not suggesting you do anything, right? But I caught, it might have been this one. I'm pretty sure it was this one. It was an 8:30 news event. And I just had a buy stop order sitting up here. And I got tapped in and taken for a ride, a nice quick ride. It's much better to just put the buy stop order, let the, because, okay, people love to mark it in. They think something's about to happen, so they mark it in. Why not just let the market grab you on the way? You know, that, because a lot of the times you'll put like a buy stop order up here, and then price will just keep kind of going down. And now you just never got in. You're not losing money, where a lot of people will kind of see like this come down and price starts to come up, so they just mark it in, and then price just bleeds down and they stop out. Where if you just use the kind of buy stop method, it eliminates a lot of really crappy trades, in my opinion. Do I take losses on this? Obviously, like half the trades I take are losses, but when you're following the trend like this, your wins are so much bigger than your losses. You can let stuff run, right? And that all comes back to the context. You know, if we're in this kind of environment, I'm happy to let winners run. I might get stopped out here and there, sure. Everyone does. You take losses. You're a trader. That's kind of how it goes. But if you are with the trend, you can let stuff run. If you're in kind of like a sideways choppy market like this, and everything's the MAs just keep crossing each other, this is kind of where you might be buying highs and selling lows. This is where I don't trade, because I get my ass handed to me, right? I like to follow trends because I like to let stuff run. It works for me, you know? So, and that's kind of what you need to do is find what works for you. You know, you can use little snippets of different courses you've taken or different stuff you've seen that you think is cool, but ultimately you have to create kind of a system that works for you. So me showing you this, I'm not showing you exactly my entries, exactly my exits and all that stuff, because it doesn't matter. It's, you got to kind of make it into something that fits your personality, right? But with this foundation, I think you could definitely do that. You know, some people just do a solid 3R every single time. They don't move where the target is. It's just always 3R. That's fine. That some people don't have a target. They just will trail the bottoms of 5-minute candles. Fine, do that. Some people will trail the moving average itself. You know, you can do whatever you want. But I think the key thing here is you're aware of what the trend is, you're aware of when it's trending, and that's when you can allow price to work for you, and you can let winners run and make the most of your winners. And there's nuances to this, and that's why it's important that you pick one strategy and just stick to it and find kind of all the nuances. But just kind of start looking around, you know, pull up charts and have a blast. And of course, if you swing trade, do it on higher time frames. It's still going to work, you know. It's like you'll still have areas where, you know, there's little clouds of liquidity or whatever, and if stuff starts burning out, blah blah blah, testing, yeah, you know, it's just like it can be applied to every single time frame. So apply it to whatever works for you. I hope that helps. Thank you.